Good evening and welcome back, everyone, to another episode of our Options Education webinar series. My name is Tony Zhang. I'm the Chief Strategist here at OptionsPlay. And today we're embarking on an important, or arguably one of the most important lessons for traders, which is how to grow your trading account by focusing on position sizing strategies. I've been a market strategist for about 17 years. And the one thing that I consistently see day in and day out from both retail and institutional traders is that successful traders that are capable of growing their account consistently, they're not necessarily the best at technical analysis or the best at options trading. What they are really good at is managing risk, managing their positions, and knowing when to take profits and when to cut their losses, which actually has nothing to do with technical analysis, nothing to do with options trading, nothing to do with their knowledge of the markets or where, how much data they have access to, what brokerage firm they trade at. The most consistent thing that I see day in and day out is how they go about managing their positions and their overall portfolio that contributes to their ability to successfully grow their accounts in the long run. So my goal here with this session is to make sure that you understand what those strategies are and how you can be on the right path towards growing your account sustainably in the long run, the same way a professional trader is capable of doing that. Now, as a reminder, here at OptionsPlay, the education that we focus on every single week is to empower you to trade sustainably and confidently. We'll talk a little bit about what that means in order to be able to trade sustainably, what that means to be able to trade confidently here in a couple of minutes. But before we do that, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that I'll be using as example purposes during today's session. So I'll start off by talking a little bit about what my session goals are to make sure you understand what the goals for this session is going to be. I want to talk a little bit about trading behaviors. What behaviors that we have as traders that contribute to our inability to succeed as traders. We'll talk about that. We'll talk about what emotions that we need to manage in order to be able to change some of those behaviors, the position sizing strategy around what you need to be doing, and then how to put yourself onto the path towards consistency, how you can take what you've learned here today and start applying it day in and day out. And at the very end, I'll open this up for Q&A here at the very end. But the primary thing that I want you to be able to walk away from today's session is a clear understanding as to how can I build a strategy that can lead to profitability. Now, before we jump into it, how many of you currently feel that you're struggling to gain consistency in your overall trading, in your portfolio, in your options trading? Please type yes into the chat window if you feel that you're struggling to some degree in terms of being able to consistently grow your trading account, whether you're trading equities or trading options. Okay, I see quite a few yeses, and yes, this session is recorded so that you'll be able to follow along after today's session. Okay, so I see a lot of yeses starting to chime in, and this is pretty common, right? I would say that, about 80 to 85% of traders that I work with typically will have periods, if not consistently, feel that they struggle to consistently grow their trading account. So you're not alone. And the good news is that traders that are successful, they're not successful because they've got more knowledge on technical analysis than you, or they have a deeper understanding of options, or that they have access to data, or research that you don't have access to. None of that really matters in terms of a trader's ability to be successful in trading. It really comes down to managing your emotions, managing your behaviors, because your behaviors that are result of kind of your emotional state is largely what contributes to our inability to be consistent in our trading. And I'm going to dive into all of that here during today's session. But just a reminder for those of you that are new to OptionsPlay, if you want access to the full recording and slides and want access to the tools that I'll be showing you today, this is all available to you completely free of charge at OptionsPlay.se. So if you want access to the slides, you want the recording, you want access to the tools that I'll be showing you today, please make sure that you take a few minutes and sign up for the free tool that is available to you here in the Nordics at OptionsPlay.se, or just point your phone to the QR code here on your screen to sign up for your free trial. It takes, sign up for your free access. It takes literally 10 to 15 seconds to sign up. So please go ahead and do that. Now, during today's session, my goal is to empower you to grow your trading account and become profitable in your trading. And that comes down to two things that you need to be able to do. First thing is confidence. Understanding how your emotional state influences your behaviors that contribute to wins and losses. We'll talk a little bit about what it takes or what it means to have confidence in your trading and how you can gain confidence over your emotional state as you go through wins and losses, how you feel about those wins, how you feel about those losses, and know that you're reacting in the right way. The second thing is building consistency, which is the ability to stick to a trading plan regardless of the current market conditions and current open positions. What do I mean by that? Many times traders have a plan. They say, oh, I'm going to do this when the stock hits this price, or I'm going to do this if the stock goes in the opposite direction that I expect it to. And when the thing happens, what do? We don't do exactly what we say we want to do. Or well before it reaches our target price, we take profits. Or if it reaches our stop loss level and we say, you know what, we'll hang on to this for a little longer because I think it might come back. You know, our inability to stick to our trading plan is many times what contributes to our inability to be successful or profitable as a trader. So we'll talk a little bit about how we can gain that confidence and how we can gain that consistency. Does that make sense, everyone? Please type 1 into the chat window if that makes sense to you. Perfect. Okay, so let's talk a little bit about successful traders because, like I said, I've been doing this for 17, 18 years now as a market strategist. And a lot of traders tend to, especially when you're starting out, you tend to think that profitable traders have access to something that you don't. They have some type of indicator that you don't have access to. They have access to some kind of strategy that you don't have access to, or they're following someone else that you're not following. But in my 18 years of experience of doing this, that is almost never the reason as to why successful traders are successful. What I have consistently seen profitable traders do is that they're able to follow their trading plan consistently. Meaning if they say, I'm going to take profits at this specific price, they wait until it hits that price before they take profits. If they say this is going to move against me to this point degree, I'm going to get out, they go ahead and do that. But more importantly than their ability to stick to their trading plan, what I've noticed that consistently differentiates successful traders from everyone else is their ability to regulate their emotions, especially when they're experiencing a loss. And this is something that's incredibly difficult to do because it's incredibly easy to come up with a trading plan. That part's the easy part. But it's damn hard to stick to it because we are human beings. We often make counterproductive decisions when we're placed under stress. When the trade is not going in our favor and we're feeling stressed about it and we're feeling bad about it, that's when we make our worst decisions. And it's incredibly important to understand what those decisions are, understand how you're feeling when you're making those decisions if you want to have a shot at being able to correct those behaviors and be able to stick to your trading plan. Does that make sense, everyone? Please type 2 into the chat window if that makes sense to you. Perfect. So this means that we have to dive into a little bit of what we call behavioral finance to get a better understanding of this, because behavioral finance is the study of kind of the behaviors that we have around money and how that contributes to, in many ways, counterproductive decisions that we make with regards to money. So first of all, we act in surprisingly unpredictable and irrational ways when it comes to money in many ways. And an example of this is sometimes you walk into a store and you see that an item's on sale. And despite the fact that you don't need that item, despite the fact that you didn't come into the store looking for that item, you buy that item because it was on sale and it feels like it's a good deal. That's just a simple example of how behavioral finance is the study of kind of us doing things that we financially may not always make the best sense. Many times you might hold on to a stock that's falling. You bought a stock at maybe 100 crowns, it's fallen to 80, it's fallen to 70, it's fallen to 60. What do? We hold on to it and we say it has to go back up. You're trying to get yourself back to break even. When everything else in the market is telling you, get out, this is not going in the right direction. Everyone else is selling, but what do? We continue to hold on to that stock. And it all comes down to understanding our biases and our quirks that influence our decision. Why do we do these things? That's important, right? It's not necessarily what you're doing that's so important, but why you're doing it. That's important for us to really analyze and understand, because that's when we have the ability to correct those behaviors, or at least understand those behaviors, so that when we are faced with those types of same scenarios or faced with these types of emotions again, we have a shot at doing the right thing. So to trade profitably, we must understand ourselves and we must understand our behaviors. So let's talk a little bit about some of these trading behaviors that contribute to our inability to be profitable as traders. First and foremost, probably the most important one is our inability to take a loss. And how many of you have been in a position where the trade is going against you? Perhaps you have already set rules for yourself to say, if it gets to this point, I'll get out. But when it gets to that point, you can't get yourself out of that trade. Please type yes into the chat window if you can relate to that scenario. And I know almost every single one of you should probably say yes, because every trader in the world has experienced this, where the trade goes against you. You should be getting out, but you continue to hold on to that trade, hoping that you get back to break even. Now, this is probably the most common type of trading behavior that contributes to underperformance, because, and this is from a human nature perspective, completely understandable, because if you take that loss, what you've effectively have to do is, number one, you have to experience quite a bit of pain of crystallizing a loss, right? You have to take on the pain of losing money. You have to accept the fact that the view that you had when you got into the trade was incorrect, which, if you really think about it, sounds kind of crazy, because you're basically beating yourself up for not being able to tell the future. That's literally what you're doing, is you're basically saying, I couldn't tell the future, and I can't accept the fact that I couldn't tell the future. I gotta hold on to this. But we all know how that ends sometimes, is that we end up losing far more money than we intended to if we just stuck to our trading plan. So we'll talk a little bit about what all these different trading behaviors have in common, because they actually have one very simple common theme. And if we understand that, and we understand the emotions that we get, that we feel when we come across these things, then we have a shot at being able to correct these behaviors. The second thing we do is we take profits too early. We say that we think a stock is currently trading at 80 crowns, is we think it's going to go to 100 crowns. But what happens? It moves up to 83 crowns and we start taking profits on it already, right? Maybe we think that, oh, it's moved up a little bit, but I'm concerned it's going to come back down. So let me take some profits. And, we've all heard of the term, you can't go broke taking profits, but you could certainly severely underperform if you take profits early. If you can relate to that, please type 2 into the chat window, where you said to yourself, I think this is my target price. It goes a little bit and you start taking profits. Next thing you know, the stock does rally up to your target price and you missed out on a pretty sizable move. The next thing we do is we take partial profits. The market has basically confirmed our views to be right. We think it's going to go from 80 to 100. It goes from 80 to 85. And what do? We take some profits, right? We say, okay, we'll keep half the position open. And then when the stock eventually maybe reaches our final target, we're watered down in terms of our exposure. We're actually not making our full profits because we've taken half the position off at some earlier point. This is less severe than taking profits early, but it contributes also to underperformance in the long run. Because ultimately, if you think about it, to be profitable as a trader, it's actually really simple. You just have to make sure that your gains are larger than your losses, right? But a lot of the trading behaviors that we have, what they actually contribute to is that our losses are larger than we want them to be, and then our profits are smaller than we want them to be, right? And it all comes down to our behaviors of not wanting to take on that loss when we should be taking on that loss and taking profits too early. Now, what do these things all have in common, right? And the other ones, you can see adding to a losing position, right? So you bought something at 80, you think it's going to go to 100, but instead of going from 80 to 100, it goes down to 70. What do? Instead of getting out of the trade and saying, "Hey, we're wrong, like let's get out, let's not lose any more money." What do? We add more to the position. We say, "Okay, you know what? Let me buy some more at 70 because if it gets back to 80, then I'll make a profit," right? So even if it just gets back to my original price, I'll be profitable if I buy some more. Next thing you know, sometimes that works out, but more often than not, the stock continues to move lower. Now you've lost significantly more money than you originally intended to. All of these behaviors contribute to doing the exact opposite of keeping your losses small and having your winners be as large as possible. All of these behaviors contribute to the exact opposite thing. Makes your losses bigger than you anticipate it to be, and then makes your profits smaller than they anticipated to be. And like I said, the rules to be profitable are very simple. Your gains have to be bigger than your losses, right? So we'll talk a little bit about how do you actually keep your losses small and how do you keep your gains bigger. But these behaviors that we do, that many of you say, I can relate to this. This is something that I've done before. I've been in this scenario. This is what causes underperformance and an inability to be profitable as traders. Does that make sense, everyone? Please type 3 into the chat window if that makes sense to you. And I'm sure this all makes sense to you because this is pretty basic stuff at the end of the day, right? So these 4 things that I've highlighted on my screen, what do they all have in common? And if you really think about it, the one thing that they all have in common is that we take on these behaviors or we do these types of behaviors because we want to avoid pain. We want to avoid experiencing pain. When we don't take the loss that we should, and we basically say, okay, I'll hold on to it for one more day. I'll hold on to it for one more day. What we're doing is we're trying to delay the process of experiencing pain, right? Because as soon as you take that loss, you have to accept the pain of losing money, right? And you might not think of taking profits and taking partial profits as avoiding pain, but that's really what it is, right? Because if you bought something at 80 that you think is going to go to 100, but then when it goes from 80 to 85 and you take profits, why are you taking profits early? You're not taking profits early because you think that that's all you're going to get. You're taking profits early because you're concerned that I've made some money here. If it then starts to reverse back lower, I'm going to lose money now. That's painful, right? That's arguably even more painful that you were making money. Now all of a sudden you're losing money. You could have made money if you just took profits, but you want to avoid this pain of what if it turns back lower and it turns into a flat trade or I lose money on the trade. That is kind of wanting to avoid future pain, right? So what do? We take profits early, we take partial profits, and we tell ourselves that by doing that, we're getting ahead of ourselves. But what we're doing is we're contributing to our gains being smaller than they should be when we take profits early. When we want to avoid pain, the things that we do contribute to our profits being smaller than they should be and our losses being larger than they should be. Does that make sense? Please type 4 into the chat window if that makes sense to you. Perfect. So This should all make sense to you because, like I said, this isn't rocket science. This is fairly basic stuff. So how do you actually get to the point where your winners are larger than your losers? The rules are actually pretty simple. When the market confirms your outlook to be correct, meaning you think the stock is going to go from 80 to 100 crowns, as the trade starts to go in your favor, when it goes from 80 to 83 to 85, right? The natural inclination at that point is to start taking some profits, right? Many times we take profits early or we take partial profits. What you should be doing is the exact opposite of taking profits. When the market has basically confirmed that your view is correct, you should be adding more exposure. What do I mean by that? Let's say you're buying the stock, right? Let's say you bought 100 shares of the stock at 80 crowns, right? You think it's going to go to 100 crowns. But when the stock goes from 80 to 85, instead of taking profits or maybe taking 50 shares, what you should be doing is you should be considering adding another 100 shares, because what the market has done is basically confirmed that your bullish view is correct. And when the market has confirmed that your bullish view is correct, that is not the time to be reducing exposure. This is the time to be adding exposure. Now, I'm using 100 shares of the stock to make it easy for everyone to understand, but this could be easily an options trade as well. Maybe you bought one contract of an options call option down here, but as the market proves you to be right, now it's maybe time to buy another contract. And if the market does go higher, you could potentially maybe even add one more contract before it finally hits your target price. But the goal is to start small, but as the market proves that your view is correct, add more exposure, because that's how you can turn a small win into what could be a huge home run if the stock does rally up to the price that you initially had a target for, right? And the goal here is to make sure that when the stock does make the move that you expect it to, not only do you make a profit, you make an outsized profit. Right now, this doesn't happen every single time. This is, this where the market proves you to be right doesn't happen all the time. But maybe this happens maybe 30% of your trades. But the goal is to make sure that in the 30% of the trades that where it does hit your target price, that you make a sizable profit on that. You don't just make a half profit on it. You just don't make 3/4 of your profit. You're making 2-3 times your initial investment when the trade goes in your favor. Does that make sense, everyone? Please type 5 into the chat window if that makes sense to you. And this is going to be incredibly, incredibly uncomfortable for you to do that the first time, right? Because everything in your body is telling you to do the exact opposite. Stock's going in your favor, you want to take profits. Don't do it. What you want to do is basically, if you think that the stock is going to trend in one direction and it starts to trend in that direction, that's your opportunity to now add to that position, because the market has basically confirmed your views to be correct. Every single time the market confirms your view to be correct, add exposure to the position. On the exact opposite, if, let's say in this example, the stock goes from, instead of going from 80 to 85, it goes from 80 to 70. What do? Every single time it does that, you cut your losses and you get out of the position. So let's say you bought 100 shares here. It starts to move in the opposite direction you expect it to. You make sure that you get out at a certain reasonable price so that every single time the trade doesn't go in your favor, you keep your losses small. Every single time you keep your losses small, then if and only every single time you keep your losses small, do you even have the shot at, when you do hit home runs, for that home run to offset your small losses? Okay? Because like I said, the rule of thumb, the rules to being profitable is extremely simple. It has nothing to do with how often you win or how often you lose. It all has to do with how much you win and how much you lose. You could be right only 30, 40, 50% of the time and still be profitable in the long run, as long as your winners are greater than your losers. So don't focus on how often you win, how many losers you have. None of that matters. And to be perfectly honest, with this type of strategy, you will have arguably more losing trades than you have winning trades. But it's not about having more winners. It's about having winners be larger than your losers. So when you do this type of trade, you do risk that, when you have a trade go in your favor and you buy another 100 shares, that the stock just reverses lower and you actually end up with a small loss. But that's okay, because what you're doing here when you're adding further exposure is that you're giving yourself the opportunity to hit home runs, and you should always take those opportunities to hit home runs, even if it means that you can turn a small winner back into a loss or a break even on the overall trade. That should be the risk that you should take, because without it, you have no shot at turning small wins into big wins. You have to add on to that exposure. So, and for many of you, what you might want to do starting off is to just start small, right? When you think the stock is going to go from 80 to 100, maybe you originally wanted to buy 200 shares. Don't outright buy 200 shares. Start with that 100 shares, right? See if the market confirms your view to be correct. And if the market confirms your view to be correct, you can always add another 100 shares and maybe even add another 100 shares. So by the time you're actually done with the trade, you actually have 300 shares of it worth of exposure. But at least at that point, the market has largely proven your views of the trend to be moving higher to be correct. You want to add exposure when the market proves that you're correct, and you want to reduce exposure when the market has proved you to be incorrect. Does that make sense? Really simple rules, right? When the market moves, when the market has proven you to be incorrect, you must get out. Reduce exposure where the market has said that you're wrong, and when the market has said that you're right, that's where you add exposure. And if you really sit down and think about it, right? Because the most common question that I get from traders is not, hey, the trade's going in my favor, what do I do? The most common question that I get from traders is, hey, the trade's going against me. What can I do to fix it? Right? And this is perfectly normal, because in all other aspects of our lives, when something goes wrong, we try to fix it, right? When something goes wrong at work, what do? We bring in our team, and we say, hey, this isn't working out. What can we do to fix it? When something in our personal life isn't going the direction we expect it to, what do? We sit down with the other person. We talk through it. We try to fix it. As human beings, we want to fix things that are not going in our favor. However, the market is not one of the things that you can fix. You can't fix the facts of the market has confirmed your views to be wrong. And it's actually our human nature of wanting to fix it that actually causes us to underperform. When the market proves us to be wrong, we shouldn't be trying to fix it. We should just accept the fact that we're wrong and keep that loss as small as possible, right? And then when the market has proved us to be right, that's where we want to spend our energy. Because when I look at traders that struggle to be successful as traders, they spend 80 to 90% of their time on these losing trades. And the thought process is that if I could just fix these losing trades, I'll be profitable. But where you should be spending 80 to 90% of your time should be in profitable trades. What do I do when the market has proven me to be correct? You should be spending very little time on the trades that are not going in your direction, because those should not factor much into your thought process. When the market proves to you to be wrong, you should just be cutting those losers and moving on. That should not be taking up much of your mental space. Your mental space should be focusing on where has the market proved you to be correct, and that's where you should be focusing on, how do I add exposure to it? How do I make sure that I'm able to capture that big move and actually capture more size than I originally started that trade with? Because that's my opportunity to hit these home runs and making sure that the profits that I earn on my portfolio are large enough to offset the small losses that I have. And I will have lots of small losses, right? You're going to have trades that don't go in your favor. There's not going to be many trades where it's going to go in the direction you expect it to. You add to it, it's going to continue going on, and it's going to add to it, and you're going to continue moving on. But those will happen. It's not going to happen too often, but it will happen. And when they do, you will hit those home runs. Does that make sense, everyone? Please type 6 into the chat window if that makes sense to you. And keep in mind, adjusting winners is not is an art. It's not a science. There's lots of ways that you could do it. There's no real rules as to kind of what constitutes as market confirms you to be right or what the optimal thing to do is. But generally speaking, you have a target price, right? And stocks usually don't move, straight up, right? They move in waves. So basically what, this is kind of where you can rely on your technical analysis to some degree, or perhaps you wait for some type of pullback to add to the position. Do you add the same size? Do you add smaller size? There's different variations to this. I think that for easy purposes, many times, if let's say you commit 2% of your total portfolio value to start with, on the next size, you add another 2%. And maybe if you add again, you add another 1%. So that total, you're risking 5% of your total account value. But again, you're not risking 5 by the time you're adding that last 1% because you've already realized quite a bit of a profit on the first two positions, right? And you certainly want to make sure you manage that. If you do add to that last point and it starts to turn back, you don't just wait all the way for a pullback, that you do have a stop loss at some point, because again, you have larger exposure than you originally did. So there is an art to this process, but the idea is to make sure that you focus your attention on winners, not losers, because a lot of traders tend to focus a lot more of their attention on their losers and not enough attention to their winners. Okay. So one of the things that we try to do to actually help you do this is we send out weekly trading signals for those of you that have registered for an account at OptionsPlay. Here in the Nordics, you receive these weekly trading signals from us twice a week. And what we do during these trading signals is we actually show you how to do this. When a trade is working in our favor, we add to those winners. When a trade's not working in our favor, we cut those trades, and we maintain discipline. We learn to manage the fear of experiencing that pain of loss. And this is a ever evolving process. You never quite learn. This is not something you learn once and you kind of just you can move on, right? It's not like learning moving averages and you can say, okay, I'm moving on to the next thing. This is something that you will continuously battle as traders, because every single time you have a losing trade, you're going to go through the same emotional thoughts. And when you have a winning trade, you're going to go through the same experience of not wanting to experience a win turn back into a loss. So every single time you face that, you feel that, you're going to make decisions. And it's a muscle memory, because eventually at some point you're going to learn that, oh, when I'm feeling this way, this is what I want to do, but this is what I should be doing. And eventually that becomes almost secondary, right? It becomes, you don't have to actively think about it as much, but generally speaking, I tend to find that even the most successful traders continuously work on this. They never reach a state where it's just natural to them. It's always unnatural to do the things that I'm showing you. So which is why it takes so much time and effort to continue to work on them. But that's part of why the trading signals that we send out every single week, such as the one that we sent out yesterday with bearish trade on TREL, we set up the trade for you. We help you understand exactly how to enter the trade, and we give you the investment rationale behind the trade itself. Now, these trading signals that we send out not only opening, but also closing signals. And the goal here with these trading signals is to help you on a weekly basis, remind you of how to look at positions, how to manage these positions, and when you're looking at a trade that's not working in your favor, cutting losses, as we cut our losses on our losing trades, and then when we have winning trades, learning to adjust them so that you can turn what is a small win into what could potentially be a much larger win. Okay, so that's included in your OptionsPlay service, which is why for those of you that are registered, you're accessing these signals. If you're trading this, or if you're accessing OptionsPlay for the first time, I recommend that you sign up for that OptionsPlay platform. It's completely free. It gives you access to the recording, the slides, the platform, as well as these trading signals. So why is what I'm teaching here today overlooked by 90% of traders? like I said, I've worked with traders for the last 18 years, and I see that roughly 80 to 90% of traders don't focus on this. Almost 100% of traders focus all of their attention on technical analysis, on reading the markets, trying to subscribe to people that they think are successful, learning about option strategies. This is where most people spend nearly 100% of their education when it comes to trading on. Why do they not focus on this behavioral side of things if it's so important? There's a few things that come into it. Number one, the education around it, I tend to find is very limited, which is why I'm doing this education session. I tend to find that successful traders are focused on trading. They're not focused on teaching. Professionals, they don't really have a huge incentive on teaching this, right? I will admit also, when I've tried to teach this topic in the past, people aren't that interested. People want to learn about technical analysis. People want to learn about the secret indicator. People want to know, what secret trading strategy that I can trade that somehow is going to make me money. Learning about risk management and psychology doesn't sound like, hey, that's the key to success. But my 18 years of doing this is the key to success. And I do tend to find that education on this stuff is somewhat limited. It is out there, but you really have to go out there and seek it. It's not obvious, and it's not kind of, in many ways, most people don't think that this is what's going to contribute to their success. They think indicators and technical analysis and option strategies is what's going to do that. But that's, while those things are important, that's not what sets successful traders apart from everyone else. The second thing is that this stuff is incredibly easy to learn, but incredibly difficult to internalize. So it's very possible that you may have come across many parts of education that includes this stuff, right? You certainly have heard many times from traders telling you, make sure that you have a trading plan and stick to it. But they don't talk about how do you go about doing it and the challenges you're going to face to stick to your trading plan. And that's kind of what I'm hoping to highlight during today's session, because the concepts are easy to understand, but they're difficult to implement without some type of outside support. So without someone who's successful at trading, kind of reminding you on a daily basis or weekly basis of what you need to be doing in order to understand your emotions, understand your behaviors, and kind of change your behaviors. And the third thing is that it requires you to face the uncomfortable. Because even though if you have the best intentions of implementing it, most humans would rather just simply do the same thing rather than facing the pain and rather being uncomfortable. So you could very well be well-intentioned, walk away from this session saying that I'm going to implement these things, but when it really comes down to doing it, many of us would rather just kick the can down the road rather than facing that feeling of being uncomfortable, facing the pain. So it requires a fair amount of introspection as well to actually want to do this and take have the willpower to do it. So that's why I think 80 to 90% of traders struggle to be successful in the long run. And many of you watching this today, some of you watching this today, might very well say, this sounds great, I'm going to go and do it. And then a few weeks later, you're back to your old behaviors, and that's what I have found in my 18 years of doing this. But that's why I think it's so important for me to focus an entire session just on this one topic alone. Because again, like I said, I don't think enough traders talk about it. I don't think a lot of traders talk about their struggles with kind of the emotional side of things. And I'm hoping to try to bring some of that to light and kind of make sure you understand what the problem is so that you kind of at least have an understanding of where you can start focusing some of your attention, some of your education, some of your time dedicated to your emotions and your behaviors, because that has far bigger consequences and impact on your chances of being successful as a trader than technical analysis or options trading or any of the other stuff that you might spend a lot of time learning and trying to figure out how to master. Does that make sense, everyone? Please type 1 into the chat window if that makes sense to you. Perfect. Seeing a lot of ones, which is great. And I hope that, this becomes something that you spend more time focusing on going forward. So just to recap some of the things that we've learned. Reaching profitability is conceptually very, very easy. You just have to have your gains be larger than your losses. But that's easier said than done. Our emotions is largely what causes us to be counterproductive in making trading decisions, where our losses end up being larger than we think that they're going to be, and our gains are smaller than we think we're going to be. And it just has one common theme, was because we want to avoid pain, right? We hang on to losers because we want to avoid pain, and we take profits too soon because we don't want to deal with the pain of a winning trade turning back into a losing trade. Very understandable, but that's what's causing us to be have our losers be larger than our winners and causing us to not be profitable in the long run. So there's two sides of the equation. You can avoid large losses in our portfolios and focusing on adjusting small winners into home runs. Those are the two sides of the equation that you need to focus on if you want to be successful as a trader. So what is the path to growing consistently? The first and foremost, in my opinion, is balance out your education. Remember the fact that we spend a lot of time on technical analysis, on option strategies, on volatility, on research, on kind of who we're following, looking at charts, looking at news, looking at this stuff, and that takes up 100% of our time. We don't take enough time to take out and think about like how we're feeling and what behaviors we have as a result of that. So take some time out to understand your emotions. Seek out this type of alternative education. Like I said, it's not popular. I tend to find that traders that do teach this stuff, many times are traders that you've never heard of, right? But the traders that do teach this stuff are really the ones that you need to spend some time and figure out how you can spend at least 20-30% of your time focus on this stuff. And it takes time to really understand your emotions of these strategies, because it just takes time to reflect on your emotions and your behaviors, and whether it's journaling, whether it's meditation. There's different tools that you can use to kind of have a better understanding of kind of how you're feeling and what your behaviors are as a result of it. But there are things that you can be doing to kind of connect with yourself and get an understanding of like, what am I doing that's contributing to my inability to be successful as a trader? So with that covers what I wanted to share with you. Like I said, just a reminder, if you want access to the recording and the slides and the trading signals that we send out that help you solidify what we're teaching here, sign up at optionsplay.se or point your phone to that QR code here on your screen. And hopefully that will kind of help point you in the right direction. And we're always here at OptionsPlay, here to help you with making sure that you understand how to access these tools and make sure that you have the right mixture of education so that you can become a confident and sustainable trader in the long run. So with that, what I'll do is I'll open this up for Q&A. If you have any questions, there's a chat window and a Q&A window here at the bottom of your screen. If you could please type your questions into the Q&A window, and I'll answer your questions here out of the Q&A window. And Karen, thank you so much. I appreciate it. I'm glad that you found this interesting. Like I said, this is arguably the most important topic or most important subject, if you will, within your trading and investment education that a lot of traders don't spend enough time on, that really needs to be a part of your curriculum and part of your process every single day, every single week, if you want a shot at being, profitable as a trader in the long run. Frederick, Hans, you're very welcome. Any questions? There's a question here saying, is a stop loss function the best way to cut your losses? It's certainly one of the most effective features, I would say, since it doesn't require you to sit in front of a computer all day long. So the short answer to your question is yes. Unless you're the type of trader that can sit in front of your computer, throughout the entire market day, right? Which most of us don't have that luxury of doing. Stop loss orders is the second best way to make sure that you can have some mechanism to control your losses when the trade is not going in the direction you're expected to. Would you base stop loss on time, price, or volatility? Almost always based on price. Because the stop loss should be stopping you from losing more than a certain amount of money, right? So let's say you have I'm going to use 100,000 crowns just as a nice round number. Let's say your portfolio is 100,000 crowns. We generally recommend that you never risk more than 2% of a total account value on a single trade. So maybe on a one trade, you have 2,000 crowns at risk. Now, when you look at that, the 200 crowns, a stop loss that you set should be based on price, right? Like at what point do I lose, let's say half of this amount, right? Let's say you're saying that if I lose 1,000 crowns, I want to get out of this trade. I'm risking 2,000, but if I lose 1,000, I'd like to get out. That's not based on time or volatility. That's based on price, which is why almost always your stop loss orders, in my opinion, should be based on price. It could be based on price of the stock or the price of the option, either one. But regardless of which one you use, it should be based on how much, it should be based on this number, right? So that if I was to lose this number, I still have enough of my original portfolio left to continue trading. Hope that answered your question, Frederick. How fast can you be sure of the fact that the market is not going your way? Can you have a rule like 5%, then I get out? Yeah. You know, this is really where technical analysis can improve your kind of timing on this, right? So for example, let's say a stock is range bound, right? And you can, if you're bullish on the stock, you can obviously get in a lot of different places, right? You can get in here, you can get it here, you can get in here. But what you generally want to do is you always want to try to get in as close to a support level as possible. And the reason for this is because what you want to maximize is your potential reward versus how far does the market need to go below that support level before you can say, hey, I'm wrong on this trade, right? Because if you get in very close to this support level, let's say you get in right here, then the market doesn't have to go very far before you can say, hey, you know what? I was wrong on this trade. I thought that support level is going to hold, but it didn't. I'm going to get out, right? Versus if let's say you waited, right? Let's say you waited till it got all. Let's say you waited because you wanted to be a little bit. You wanted to confirm that this was going to be support. Nothing wrong with that, right? But let's say you waited and you got in here. Let's say you got into the trade here. Now, how far does the market need to pull back before you can say, hey, I'm wrong, right? Because if it just pulls back this amount, I wouldn't quite say that you're wrong, right? Because it could very hit that support and bounce off and continue moving on, right? That's part of kind of natural volatility. It would have to pull back maybe that far before I get out. So that's really kind of where when you're looking for trading setups, you want to trade trading setups where you want to get in as close to the point where you would say, hey, I'm wrong and get out, because then you're minimizing the overall risk that you're taking. Does that make sense, everyone? Right? Because like if you think this is going to bounce, you can certainly be very early and enter here, right? That's riskier, but the stock doesn't have to move very far if it continues to move lower for you to get out, right? You can certainly be a little bit more conservative, wait for a move, but then when you wait for a move, the stock would have to move down by quite a bit more before you can say, hey, I'm wrong and get out. So I wouldn't use a hard and fast number like 5%. It depends on your entry and how close you are to that support level or that resistance level where you can say, hey, I'm wrong, I want to get out. The closer you are to that support and resistance level, the smaller the stock would have to move before you would say, hey, I'm wrong, I want to get out. Hopefully that answered your question. Any other questions? If there are no other questions today, I really appreciate everyone taking the time out here this evening. I really hope that this was enlightening for you because, like I said, this is different than what we normally do, but this is arguably the most important thing that we need to spend our time on because, all the other stuff, technical analysis, option strategies, volatility, Greeks, very, very important, right? You can't trade without it. But if you only have those tools, it's not enough to be successful as a trader. You really need to have this third element of understanding kind of your emotions and your behaviors, and specifically the strategies around managing your behaviors and kind of how to turn small wins into large wins and keep your losses small. That is the key. Meaning without that, it's incredibly difficult to be successful as a trader. So it's just very important that you have this element of education in your curriculum in order to be put onto the right path towards profitability. So I hope that today was enlightening and kind of inspired you to kind of learn more about this stuff. Position sizing, risk management, like I said, not sexy, not the sexiest stuff when it comes to investment education, but arguably the most important stuff. So please take some time, reflect on it, seek out some more education, and come back to me if you have any questions. We're always here to help kind of make sure that you have the right tools and right information to help you be a confident and sustainable trader. With that, thank you so much. I hope you guys have a great trading day, and I'll see you guys here at the next session.